Do you wish that you could have bought real estate at the bottom of the real estate market in 2012? Or do you wish that you could have bought real estate at the bottom of the real estate market in 1996? What if I were to tell you that today is the bottom of the real estate market? Hey guys, Freddie Crespo, broker, owner of Investors Real Estate. I'm going to tell you some incredible stuff about the real estate market, where the prices are going, where they have been, when the market will peak, and when the market will hit rock bottom. Stay with me as we go through this.
What are you saying, Freddie? Are you crazy?
No, I'm not crazy, and I'm going to prove this to you right now. First, let's start with the real estate cycle. Real estate cycle is always 17 to 18 years. And in that real estate cycle, there are 4 phases. Phase number 1, the builders overbuild. So you're overbuilt, too many properties on the market. And I'm going to show you an example here of when the properties were overbuilt. On this graph, you can see here in October 2007, there are 26,330 homes on the market. And if you look at the other highlighted area, that's how many homes sold that month, which are 1,300 homes, leaving over 24,000 homes on the market that didn't sell the next month. So that is a perfect example of being overbuilt, and that happened in 2007 when the real estate market peaked. Phase 2, a crisis happens. So you have all this inventory, and in 2007, 2008, the financial crisis hit. And so people lost their jobs, a lot of unemployment, too much inventory. They try to put this real estate, more inventory to sell. It doesn't sell. Prices start dropping because there's just not enough demand for all of this inventory. And that's when phase 2 comes in, which is the foreclosure phase. So now the foreclosures start to come, and that leads us to phase 3. The banks start to unload the foreclosures. So during this phase, we got to get rid of all of this foreclosure inventory. No builders, no one's building, and there's all this inventory that the bank is unloading. So during this phase, until the bank homes are gone, the bank-owned homes are gone, that's when we will get to phase 4, which is expansion. Phase 4 is when the builders come out and say, oh, the inventory is really low. There's hardly any inventory, and they start to build to catch up to population growth and demand. And that's where we are right now today in phase 4, expansion. And what do the builders always do? They overbuild. And that brings us back to number 1 of the real estate cycle. Okay, so let's go through it really quick. The peak of the market, 1990. 17 to 18 years later, 2007, the peak of the market. That's actually 17 years. Then, what's the next peak? Well, 17 to 18 years puts us at 2024, 2025, but this time around, it might go a little further because the builders started building late. They started building around 2017. So from 2017, it takes them about 10 years to catch up to population growth and overbuild. So that's 10 years, brings us to 2027. Approximately. That's what we're working with right now. Okay, so check out this property. I'm going to show you. We're taking this back to the previous peak, which was 2007 when the market peaked. I'm going to show you an example. We've got this house here at 2127 Bonanza Avenue in Winter Park. It's an average house, sold for $255,000 in early 2007 in March. It's a house with 1,457 square feet with a pool, and I'll show you some of the pictures. It's an average house, okay? So an average home with a pool, not a big deal. Screen enclosure, you can see the pictures there. And by the way, as a side note, if you look at history, from 1990 to the bottom of the market, which was 1996, was 6 years. And if you look at the top of the market, 2007, and the bottom of the market, it's 2012. So that was 5 years. So between 5 to 6 years is what it takes to go from top to rock bottom of the market, okay, on average. So keep that in mind, okay? Okay, I had to move over a little bit because the sun's coming through now. So now we're going to the bottom of the market, right? In 2012, the same house. Take a look at this house, or it's a very similar house. Same neighborhood in Eastbrook. It's 3554 Bowman Drive. Also 1,468 square feet, built in 1967, and also has a pool. And this is what this looks like. Also average condition. See that? So it's a pretty much same house. Okay. This house sold for, at the bottom of the market in 2012, at $140,000. So now we're going to do the math. So the previous house sold at $255,000 at the peak, and then it dropped to the bottom at $140,000. Then the percentage is 55%, almost 55% drop in price. And we can see this over and over in a lot of other examples. That's a pretty good average. Okay, so why is today the bottom of the market? Let me explain. 2027. So at 2027, that means if that's the next peak, add about 5 to 6 years to that, and that would bring you to about 2032, 2033. That's based on what we just saw, 5 to 6 years for the market to drop. Okay, so I forgot when I was filming to mention this very important detail. If you draw a line from the bottom of the market, okay, the bottom of the real estate market price to the last time the market was at that price, you come out to about 9 to 10 years. So let's take, for instance, in 2012, the bottom of the market price in our illustration was $140,000. If you draw that line to the last time, to the year, the last time those homes were at that price, you would get 2003. So that's a 9-year drop, basically, in price. If you draw a line from the next proposed bottom of the market, which is basically 2032, let's say, and take 10 years off of that, that's 2022. So basically, that's why 2022 may be the bottom of the real estate market, but it's really the bottom of the next bottom of the real estate market, but it's the same prices. Therefore, if you're buying today and the prices go up and then they come back down, they're going to come down to today's prices. So if you're thinking that prices are going to go below today's prices, that may not work out. So that's the theory anyway. So back to our previously scheduled program. So let me just reiterate that after the next peak, whether it happens in 2025, 2026, or 2027, so let's do the math from 2027. That brings us to 2022, which hasn't happened yet. We're in January of 2022, so the bottom would be this year. Okay, 2026 would bring us 2021, which was last year. So if it happens in 2025, we're looking at 2020. Now get this. What are those prices for the same exact house that I was just showing you? Well, today, that house is worth $340,000, and let me show you right here. Take this example, Eastbrook, same subdivision, 2102 Bonanza Avenue, just sold. Let's look at the closing date on that. And that sold in November of 2021, so about a month and a half ago or so. Let's just say 2 months ago, actually. Same thing, 1,458 square feet, built in 1969, 6 days in the market, so absolutely quick. And let's take a peek at it. It's the same square footage as these other two that we just showed you. This one looks really nice, okay, and looks like it's in average condition, just like the others, $340,000. That is what it goes for today. So all we got to do now, let's keep showing you some more pictures. All we got to do now is add the 55% to this. So, because remember, if today's prices are the bottom, then it's going to go up another 54% to hit the peak, right? This house should peak out around 2027 at $620,000. Right around there, approximate. That's if history repeats itself. So I need to clarify something. When you're adding 54%, you're not adding 54% of today's value. You're adding 54% of the peak's values, 55% of the $620,000, which would bring us to $340,000. So prices drop 55% on average from peak of the real estate market to the bottom of the real estate market. So if we do everything backwards and today is the bottom of the market at $340,000, you can just double that and you get pretty darn close to it. But it's $620,000 is what that house will be worth at the next peak, which we'll see. The video will stand. We'll see what happens, see if I'm right, see if I'm wrong. But history almost always repeats itself. It already has. I showed you from 1990 to 2007, which was a whole real estate cycle. And then the next real estate cycle that we're in right now, we'll see it coming soon. So if you buy in 2031, let's say, this same house is going to be worth $340,000, the same that it's worth today. So there it is. That's everything in a nutshell. If you guys think this is fascinating, if you guys think this is something worth looking into, if you're thinking of selling your home or you're thinking of buying, please give us a call so we can explain to you what the best strategy is and just help you with your move or whatever it is that you need in real estate. It would be our pleasure, our honor to help you and have you as one of our clients. So thank you very much for watching this. Hopefully this was entertaining and informative for you, and God bless you and take care.
Not just a home, it's an investment.
Investors Real Estate, LLC.